Okay, hello there, traders. Welcome to the TOGS Trading Podcast number 11. Okay, here we are, number 11 into our conversation between myself and Ian, hoping giving you just a little bit of insight into what trading life is really like compared to some of the nonsense I'm sure you see on social media. So today's session is all going to be about, here we are, all right, it's the end of March, so it's the end of the month. It's the end of the first quarter, 2024 already. And for some people, for some business and stuff, it'll be the end of the financial year here in the UK as they go into April and beyond. And also, we are going into kind of an Easter holiday period, and markets this week have already started to show that. So kind of a theme this week is all about, right, it's that first sort of quarter. What have we learned, okay, from 2024, both about markets and ourselves and methods, etc. So we can have a little chat about that. So as always, to join me that is my friend Ian. So looking good, Billy Ray. How are you?
And
How are you,
still
Ben?
not, man, still not feeling it. I still have the flu, unfortunately. But anyway, I'll survive. I'm actually on my own at the moment. My family are gone to Legoland in just outside Munich.
All
So,
right.
yeah, and then they're spending a bit more time in
Munich.
Germany. Yeah,
Right.
and they're spending a bit more time in Germany, and then so I'm here on my own for 11 days.
Home alone for 11 days over the Easter
Oh,
period.
yes, the house will be
And
so clean and quiet.
now, if I remember rightly, from even when I was living in Dublin, in those days, like pubs and bars and off license, they were closed on Good Friday, weren't they?
They
It's it's
were.
it's, it's only a relatively new thing the last good few years that
Mm.
pubs and off license and stuff are open on Good Friday, isn't that? Have I
Yeah,
remembered that right?
it's the last 5 years, I'd say, something like that, that they've been open on Good Friday, which I kind of don't like actually. I thought it was much nicer. And then what would happen? I remember being at the Aran Islands on one Good Friday five,
Oh,
6 years ago. And sure,
nice.
all the pubs were open. There's no policemen on the Aran Islands. And it was great. And you felt like you were doing something really exotic by going to the pub on Good Friday and all this kind of stuff. And it used to be a great day for house parties and all that kind of stuff. So I think it's been more of a cultural loss as well as whatever else like that. We've lost Good Friday to allow us being open. And I mean, it's one more Friday. What do we really need that for? I mean, we're a drinking nation anyway, so I
Yeah.
don't know. I would say boo to closing on Good Friday or to opening on Good Friday. But anyway, that's just me,
There
basically.
you go. I never thought I'd hear Ian say down to pubs being open and stuff, but
Yeah,
there you go.
that's the only time I'd
But
ever say it.
but
Even on
yeah,
Christmas Day, I wouldn't mind if they were open. Like, I wouldn't mind like if they had a pub open in the morning, you go in for a pint after mass or something with your friends. But Good Friday, just sort of no. It's house party day. It's the day you panic on the Thursday before and the Holy Thursday, and you panic going out and buying cans of beer, and you buy enough alcohol to do 16 days because you're just so panicked about the shops not being open for one day. But anyway,
yeah, on that kind of brings home memories of when I first moved to London like 20 odd years ago. I lived in a place called Tooting, South London. All right, kind of
mm,
Liberation Front and all that. And on the corner of Toonbeck, there's like the cross where the tube station. You got the tube station on one corner. You used to have a garage on the other, and then on the other you had the big Irish Catholic church, and then the pub on the other corner. And literally, you talk about a pint after mass, or if you walk
mm,
around there on Sunday around about sort of 11 to 12 and what have you, and literally back in those days, literally you'd see all the Irish Catholic families come out of the church on a Sunday morning and go literally straight across the cross at
mm,
Tooting back into the pub, and then they'd be there for the afternoon, and your man would have he'd have the Gaelic or the hurling on or something and what have you, and they'd be in there and stuff, and it would be like literally it would be
mm,
in for a post mass pint and stuff and what have you. Just
mhm. Yeah.
I bet it's not like that. Well, I don't know, but I suspect it's not like
I
that
did.
anymore in that
No,
part of
I
the world.
remember. I think it was incredibly important. I used to live in Berlin years ago, and there
Mhm.
was a pub down in Kreuzberg, which is this really dodgy area. Like you didn't like walking there. But it was the most Irish pub in Berlin, as in it had the most Irish people in it. It had the staff were Irish. It was a little embassy of Irishness abroad.
Yep.
And for those types of things, when you're living away, I was in there on Christmas Eves and stuff like that, and Easter Sundays, and you go in and you have your meal inside in it, and it was all with your friends because you're at the job I was working at the time. You had to be there over the Christmas, so it was just nice. It was nice to have them open for that point of view, I suppose. And I thought it was incredibly important, like, just because it was either doing that or you're sitting in your apartment on your own, basically.
Course,
So
but it's
I
changed. I stayed there for
yeah.
a few years back and stuff. Last I was dating had a place there. We stayed
Mm.
there. But it all changed. It's not as dodgy as it used to be. Although maybe I just went to the nice part. I don't know and stuff. But
Well, that pub is now a vegan restaurant.
really, yeah,
It
I wouldn't have
is.
gone if it was a vegan restaurant.
It's one of the saddest pieces of news about architecture being destroyed in a different country that I've ever heard in my entire, whatever about Notre Dame or whatever like that burning down. The pub turning into the Irish pub, the best Irish pub in Berlin, turning into a vegan restaurant.
Turned
Just,
into oh lordy, oh
it
dear.
just hurt me. But I also remember
Heartbreak.
actually being in London back in about 1992 or something like that, and I was in a pub in North Harrow, and it was
Oh yeah,
again it's the most Irish experience I probably have. There would have been less foreigners in it than you would have gotten a pub in Ireland because there was no English people in it. Um, they had Irish, they had Gaelic on the television. There were seven people from my hometown that I knew in the pub on a random like Sunday morning
yeah, yeah.
because
It,
it was the end of the big immigration for Irish people. So they were just
that's it.
that was the last generation. Mine was the first generation that didn't really have to immigrate.
That's it. Yeah. No, there you go.
Mhm.
That's it. That's the yeah, because when I moved over to like the 2000 stuff, yeah, there were still big Irish communities and stuff. So I remember there was a big Irish pub in Hanger Lane and stuff that we go there. A lot of people would be going there, and there would be I was going to call it Kildare, Kilburn. Kilburn was like a real Irish community there, and then there was a couple of other pubs and so Ealing. There's one in Ealing and stuff. What have you? Real yeah, real solid Irish, and it's not like that anymore. I know that everyone goes on about the Devonshire and so, which is a very very nice pub, and it's like Keogh's in London and stuff these days. But it's yeah, it's different as you say. The Irish aren't emigrating to London in the kind of droves that they used to and
Mhm.
stuff. So, but there you go. Anyway, so there's a little segue for us
Mhm.
before we get talking about the real meat of the session, which as I said is about here we are already we're already at the end of Q1 of 2024, and that's flown
Mhm.
like that stuff. And so it's a case of right, this is a chance to reflect upon what you've made of the first 12 to 16 weeks of a year, the first quarter, and what have you seen, what have you learned, what can you
Mhm.
take away and stuff. So when it comes to yourself, being what
Well,
have been the takeaways?
the first thing I'd say is actually the markets have been kind of crap for the last week, for the last few days, not so much the last week. A lot of chop. Um, like difficult. It's a difficult time and also on top of that, it's one of the things I was going to come to later on is that a lot of the good setups are triggering at weird times of the day. Usually you would get a cash session, like an American cash session, really good setup would trigger at that time. Around 10 o'clock their time, something like that. The trends would start. But you're getting trends that are starting at 7:30 in the morning, my time, GMT, or 8 o'clock this morning. I think the 8 or 9 o'clock this morning, I can't remember. The today's best trade triggered.
Yep.
Basically, so you're getting an awful lot of you're getting the leftovers in the cash session. Or again last night, like it triggered quite late in the evening, and then it went down to a long, and everything it is they're just at weird times. There's not great trading during the actual cash session, which is usually the time when you would make the most amount of money because there's nobody making any decisions. Nobody's buying big amounts in the in the market at this time of year, not coming straight up into Easter and Good Friday with Good Friday being closed. So it's been not a prosperous week now, I have to say, from trading, but it's just what it is. It's the market has just been the market, and there's nothing you can do about that.
Yeah,
So
yeah.
that was just one thing I just wanted to remark on because in case anybody was finding it tough out there this week, I think everybody's finding it a little bit tough this week. And if you're in that sort of intraday time frame, basically, I don't know what some of the other markets might be doing quite well, but I wasn't following
I'd say it's been pretty for like kind of like swing trading and stuff has
them.
so for example last week there were some beautiful swings but
Mm,
you weren't taking them because every day was full of big major news announcements and
mm,
so I don't trade it in front of news announcements even when I get a beautiful setup I don't I just basically I just leave it, all right. And so
Mhm.
effectively, you had a week of beautiful swings,
Mhm.
but not really any opportunities that you could really take with any kind of a genuine commitment. And then, of course, after that, this week, a bit like you said, is it's going dead, all right. Okay, it's going quiet, it's going dead because all that big news has come out. People are basically, they're clearing up end of month, end
Mhm.
of quarters, focusing on sorting that out. The big boys, they're off on Easter holidays. They're either chasing they're chasing the last bit of the snow, all right, or they are searching for the first bit of the sun and stuff. They don't want to be they don't want to be in front of the desks at this time of the
Mhm.
year. And you have to remember, even with all the algo trading, there's still humans. Humans want a break. They want a break. Whether you are a trader who's been trading for 2 or 3 months, all right, and in your little small home and your spread betting account, or whether you're a tier one guy running like a $200 million book and whatever, you need a break, and you get a little bit of spring, a little bit of sunshine breaks out, and you just get to a point you're like,
Mhm.
I need a break. I want a break, and everybody's the same. Humans are kind of the same, and so you see markets kind of just they just almost like collapse, and what happens is you get. I think gold has done that this week. Gold did that yesterday. Something happens, and you get a big spike up, but then it
Mhm.
actually comes back pretty much by the end of the day. It's returned to exactly where it started because there's nobody there with any real kind of any kind of enthusiasm or momentum to basically to keep pushing it.
Mhm.
So they are tradable opportunities, but you have to switch your mindset to understand the kind of the environment you're in and adapt to it. And sometimes that adaptation is just actually go and sit in your hands, go for a walk in the park.
Mhm.
That's sometimes the best thing. So
I came down and
yeah.
slept for 2 hours yesterday in the middle of the cash session, and I missed absolutely nothing. I was back up 2 hours later, and the price had basically there was a couple of wicks on a 60-minute chart, and that was all it was. So it was just dull as dishwater. But the other thing I wanted to say about the algos, just with somebody has to switch them on. There has to be human to switch them on. Sometimes there has to be human to select which algo to switch on at that particular time. So there's a human that's watching the market to go, okay, we'll switch on this algo today and that algo tomorrow, or whatever it is, to achieve whatever they wanted to achieve in the market. Like if you take the very simple thing like a buy program, where they just decide they're going to go and buy a particular stock, and then they will buy a few bits of that stock on every downtick to push price up. Somebody has to select that and somebody has to switch it on. Somebody has to be there to monitor it. So it's again, as you say, it's the same thing. At the other side of it, there's a human that's its minder and controller, and that guy needs time off, basically at the end of the day. So yeah, so the first thing I found of my review was I was sick quite a lot in the last 3 months. I think my son gets a head cold and I end up in bed. So so I lost at least 4 weeks, I think, to just rudimentary flu-like illnesses. Um, it's which usually I'd lose 1 or 2 weeks at around this time of year anyway. That's totally this part of the course. But this year I've lost four. And I think that's just bad luck because you can kind of do busy work and you can kind of do a certain amount of stuff. Um, but you're always going to be slower. You're always going to be a little bit behind, and it can be quite dangerous. You need to be very careful with what you're doing. And you're not going to achieve anything outside of the core things that you have to get done. You're not going to complete projects. You're not going to complete anything else. You're just going to get your core work done, and that's basically it. So that was the first thing that I noticed with that hit me this year was that simply I was sick quite a lot, and that cost me quite a bit in time. And the unfortunate thing as well is that as the self-employed person, you don't get paid. So yeah,
Yeah.
so there's always a cost in that, although you have to factor that into your earnings, is that there are going to be periods you're going to have a month or 2 months every year that something is going to something's going to going to affect your trading enough. And if you can't make it in 10 months or 9 months, if you can't make a yearly income in 9 months, you
Yeah.
shouldn't really be worrying about it too much. um
No, I'd agree with that. It's something I've had to work with and stuff. Uh, I'd say there's probably been I wouldn't say I've lost 6 weeks, but there has been a 6 week period, I'd say since mid-February, where I've just basically had kind of like, a bit sick, a bit flu-like symptoms. You think you're getting over it, just think you're getting over it. There's a relapse or for some reason and what have you. And so you've been able to work and operate, but it takes the wind out of your sails. You're never operating at your best, and when you're feeling a bit crappy and stuff, going and actually having a kip for a couple of hours might well be the most profitable thing you can do, right? Especially if you're going to be, trying to scalp or intraday trade, and you're just not feeling it. You're just not in a good place. You're not going to. Or the probabilities of you operating effectively and in that kind of window, that time window, it kind of diminishes. So you have to manage yourself. You have to manage yourself and put yourself in a good place. And recovering from a health issue or where is becomes more of a priority than missing out on one or two trading opportunities, because there will always be trading opportunities, but it's in your best interest to be in a good place to be able to take that on board and stuff. So so no, I'm with you on that.
Yeah, because it's very much it's a performance job. It's completely unlike like if you work in the civil service or the public service or something like that, you're turning up because what you're doing is selling time. So it doesn't matter in some ways how productive you are during that time. Like I could go to work in the public service today or whatever and push my papers from one side of the dole office to the other side of the dole office. But I couldn't do any thinking work. So I could still turn up, I could still sell my time, but I wouldn't excel at anything that I was doing. And an awful lot of jobs contain, certain amounts of busy work that you can just do when you're not feeling 100%. You can answer those emails you've been meaning to answer for 6 months, make the phone calls maybe that you've been meaning to make for 6 months, do some filing, whatever it is like, but it's not in trading. There's only trading in trading, really. So, and then there is busy work you can do in trading, but it doesn't create any income either, I would say, with busy work. I've been doing quite a lot of busy work now recently because I've been working on projects, which is the next thing that because I've been trying theoretically at least to move from scalping to doing slightly longer term trades. So as I explained before, I'm a range trader. So I will create a range using Fibonacci, and then at the bottom of it, if there's a hold, I can expect price to be tested at least in the middle of the range, and then probably at the top of the range. So I was sitting there and I was thinking one of the days, I'm doing a lot of work for like I evolved as a trader to fit into my lifestyle rather than anything else. So I had a busy family life. Young son, he's 7, he needs a lot of time, all that kind of stuff. Wife has a career. So so I was very time poor. So my trading, there was two things that happened. One is I spent a lot of time with scalpers, and my trading kind of evolved into, right, you've got this 2 to 4 hour window every day that you can actually work. And now you have to create your income out of this 2 to 4 hour window. So you're going to use setups that create that income in that time. So a lot of scalping. I was doing an awful lot of scalping. So, and the problem is that in a 30-point move, which is, so most ranges are 20 to 30 points wide. So in a 30-point range, I might take 10 points out of it, and that's an okay day for me to take out 10 points because I'm only working a couple of hours. Like, so, it's not about the size so much as it is about the liquidity and position size. How many contracts basically you're trading, and it's not about how many points you get as such. If you got 4 points a day, you got them reliably. Excuse me, you got them at a highly liquid time of the day, and you had enough contracts on. There's a living in that. So, but I've been trying to move over to slightly longer stuff, do the tops to the bottoms of the ranges, and it's a different philosophy because scalping is very much price action. So you're always looking at price action. Where when you're doing the slightly more swing trading, I think it's not swing trading as such, but swing trading, I'll call it swing trading for a moment. What you're doing is you're looking at the defense of an area, then ignoring to a large extent the price action of price until it hits a target. So you're getting into your trade, you're putting in a protective stop, and then in theory you shouldn't do anything else until it hits some sort of target, basically. that's philosophically different to what I do now currently, where I'm in and out, in and out, in and out, in and out. Um, and I found that quite it's longer, it's a longer day. It's a longer day, but it's less intense work. So if you go into scalp for 2.5 hours, it's like driving a Formula One car around the track. You're there for 2.5 hours. But if you're if you're doing this version of longer intraday stuff, you're only really on for 20 minutes. And the rest of the day, you're managing your position. You're making sure that nothing goes wrong, nothing happens to your position, whatever else. And um, that's the thing I find incredibly boring. There's only so many cat videos you can watch on YouTube at the end of the day. Um, so I find that quite difficult. And then you want to be, idle hands, devil's work and stuff like that. You don't want to end up screwing with your positions. Um, then then it's psychologically different because when you go into these new longer trades, you don't get them all the time. So, like as I said, this morning's kicked off at 9 o'clock this morning. I was driving my family to the airport at 9 o'clock this morning, so I wasn't in front of the screen. So that kicked off, and it went off whatever 14 points or 15 points so far. I can't remember. And the rest of this week has been characterized by these swings, these little intraday swings, like 20, 30 point trends, have been starting just and ending at weird times when the width of them. So on a normal week, a lot of the time they open and close in a cash session or less than a cash session, we'll say, in that kind of distance. Where now at the moment they're starting at 8 o'clock in the morning and closing at 8 o'clock at night. And that's a long time. That's a long time to be doing that. Like, but on the other side of it is that you can size those up to whatever the hell you like. You can size those up to, you could theoretically put 100 contracts on those trades because there's plenty of liquidity for that. There's plenty of whatever else, like, so you can do what you like in a way that you can't do it with scalping. You can scalp large volumes, but it's too easy to get into trouble. Where with these fixed, this is the bottom of the range. This is my 2.3 point stop loss. So you know exactly what you're risking. You're putting on your trade, so it doesn't matter whether you put on one contract, 10 contracts, 20 contracts, it's all the same because you're going to get some slippage. It's going to cost you a bit more money. You're going to get a bit more slippage. But in reality, there's no extra, there's nothing extra, there's no extra work in it.
Yeah.
And you can size them up. You can size them up to what you like, I think.
And if you're a scalper and intraday trader and you can get away with risking 3-4 points for 10 points of profit, that's a trade you'd take all day. You would take, maybe if it's at the place where you want to get engaged. As an intraday trader, you're getting anywhere sort of 2 to 1 R and above and stuff, 2.5, 3, etc. You need to take that trade all day, every day and stuff and what have you. So yeah, I can understand. I can understand why you'd be wanting to get on that, but for that to happen, you need to have there needs to be a little bit of the right volatility, kind of almost like the Goldilocks volatility, not too hot, not too slow, just about right to give you the opportunity. And actually, that is one of the things that I have seen over the last couple of months is that in terms of momentum within FX markets, it has waned. There have been periods. We had like maybe the first 3 weeks of the year, we had some really very clear trends in the FX markets, and then an awful lot of those an awful lot of those FX pairs have been in kind of wide, scrappy ranges, for the remainder of the quarter. Now, I kind of try and tell traders that there's times of the year, there's phases of the year, there's times of the year where it's better to be trading equities and indices, and there's times where it's better to be trading FX, and sometimes it's very clear or very obvious, other times it's not. But what has been clear, probably I'd say for this quarter takeaway is that the kind of the energy and the momentum has been in indices and in equities more so than in FX pairs. Okay, and so a part of your job as a trader is to be able to recognize that as soon as you can and adapt. Excuse me, and adapt to that. If you also trade equities and indices, well, that's where most of your time and energy is going to go. If you're, let's say, if you're happy trading various different instruments, but if you let's say you just trade FX and you realize that the kind of the volatility is weighing, there's not that much momentum flowing through, but then you have to be able to adapt to that. You adapt in the way of where you're getting in, you adapt in that in terms of the size of your stops, and you adapt to that in terms of where your targets are. Where you might be aiming for, let's say, 3 to 5 R as a possible target on a trade. You might have to realize that it might be 1.5 to 2.5 R in the present circumstances, the present climate, and you just have to be able to adapt to that. All right, and that's why I think becoming let's call it like a human method trader. It takes a long time and is a painful journey, but acquiring those skills is what allows you to adapt to changes in market environments. Because if you traded for a good few years, you'll know market environments, they change throughout the year, and it's your ability to change that'll actually will help you survive and prosper. And I sometimes think that you talked about the boys and girls just turning on the algo and what have you. That algo worked well in certain market environments, but as when the market environments change, very often they are unable to change with it because they've created a program that works very, very well in a certain set of circumstances, and those circumstances they never really last. They never really last. Markets are checked, and you have to adapt to it, and that's part of the juice of it, is being able to recognize when they've changed and adapt accordingly, and almost have profiles. All right, profiles for volatile markets, profiles for quiet markets, and work within that. So it's not always easy at the beginning to understand that, but the more you do it, the more you do your analysis, the more you start to get an understanding of kind of where the momentum is and which asset class has the momentum at the moment. So, and I kind of linked into that. I think I alluded to it the other week. I did a talk at the London Trader Show, and it was quieter than I expected. And I came to the conclusion, and I could be wrong on this. I'll hold my hand up. I could be wrong on this. Is that part of the reason it's wrong is because everybody was making easy money in Mag 7 stocks and Bitcoin, and when everybody's making easy money, they're like, well, why would I come to a trader show? I know it all. I don't need to learn anything new. I don't need to find out what's going on. I'm making money, but that will not end. That will not last. And then when it ends, then you get, when there's a crash or that's when you get everybody pouring into those trader shows, because everybody needs a little boost, or they need to know what the next big thing is that they can chase. So but as I said, I could be wrong on that. Maybe that's my wrong take. It was just from watching and listening to and actually just talking to lots of traders that day. That if you were in Mag 7 and if you were in certain Mag 7 and Bitcoin stocks, well, you've had a great quarter. If you were trying to scalp some other instruments, you might have had a challenging quarter. And it'd be interesting to know, actually, if people listening to this, they put it in the comments, right? Well, what has worked well for you, or what has challenged you this quarter and stuff. I'd be interested to know the kind of feedback and hear what other people's thoughts and comments are about that. So
that's one of the things I started seeing creeping in again, was people talking about Bitcoin, the whole hodl thing, and if you don't have Bitcoin, you're basically, there's something wrong with you. There's obviously, and that's just the case. That's every boom, and there's been so many. Bitcoin has brought along lots of small booms and busts, obviously, again after that. And I think that the problem is that an awful lot of people who go into those things, they don't know how to manage their trades. But it's the thing that happens every trader, because if you don't have an edge and you go into a trade, and then you start making money, because because like there's a if you're having a relatively quiet day in the market, as you were saying that you would use different things. So as a scalper, what you would do is you're having a relatively quiet day. It's not going that far. So what you do is you switch down to a tick chart and a stochastic. So price is generally going up, we'll say, for lack of a better word, which is very easy to know because you look at the legs on it, basically. So the up leg is longer than the down leg. Up leg is longer than the down leg, and then you're using whatever your favorite indicator is on a stochastic, and that basically a standard setting stochastic, and then in an uptrend, in that basic little uptrend, what's going to happen is that every time the stochastic comes down to oversold, you're going to get a bounce, and you're going to get a 2 or 3 point bounce up, and you can hammer away at that all day long. You can do it in a 2 minute as well. Actually, I was trying it recently on a 2 minute just to see how I got on with it. And that's a trend is paying you at the end of the day. This isn't a huge amount of skill because these types of intraday trades they're not skill intensive. You're not sitting there like, at the end of your thing. What you're basically doing is you're waiting for an oversold, and then you're in an uptrend and you're waiting for that little bounce. Like you put down your trend line and off you go, basically. The only thing that you have to do is not select too quick of a tick chart. Because if you select too quick of a tick chart, you're going to end up with too quick of a signal, and the signal are too many false signals, and then you're going to get yourself in trouble. But it would be very easy if you go and you show somebody how to do that one little thing. They'll use it all the time, but they'll also mistake the money that they're making as a big skill, as that they're increasing their skill, where the real skill in a trader is not profiting in just in one market. It's being able to profit in all the different types of markets that come along, or most of them. You're not going to profit in every single market because every single market doesn't have a profit potential. And I think and I think as well, it actually just brings me on to my next subject, which I was just thinking about, because there was a bunch of the house next door to me. There was a bunch of young lads lived in there for a while who were about 27. They all worked in tech companies, and they all were making bananas money for a 27-year-old. And they were all sitting out the back there one day in their garden, near my garden, and I could overhear them talking about Bitcoin.
Yeah.
One of them was egging the other on. Oh, Bitcoin, go to the moon, $1 million, buy a house and a Ferrari and Rolex, and off you go. And you could see then that they were going to take that pressure away with them, and and end up the next day buying some Bitcoin at some stage, and they have absolutely no idea whether that Bitcoin is a good investment or a bad investment or whatever. They would have got blown out of the water at the time they did it, I think. And it's one of the things, because one of the things that I've noticed as well in the last few months, which I didn't do consciously, is I really pulled back from mentoring.
Mm-hmm.
For a couple of reasons. One is that I just didn't have the time to do it, the energy to do it, and I couldn't find somebody that I wanted to mentor either, because I mentor for free. So it's very much down to the how you get on with the person, how you want to see somebody who is dedicated and like hardworking, intelligent enough to do it, resourced enough to do it as well, because you get these guys contacting you looking for mentoring from third world countries, and they basically have $20 on the phone.
Yeah.
And they're not resourced enough to do it. What they're basically going to end up doing is putting their $20 on USD JPY or something and hope for the best. And they have to be tremendously lucky for the first 50 trades to get them out of the hole that they're in. So, which I do find sometimes, I find it incredibly sad, because you do get really talented guys and really dedicated guys, but if you don't have the resources,
I know. Yeah.
what can you do? So I pulled back unintentionally quite a bit from mentoring, and I'd also pulled back. I'd also been thinking about recently about limiting again my how much time I spent with people who work in the market. For the simple reason is that like if I want to make a change, I don't want to be influenced by other people. I don't want to hear because you don't want to have ideas given to you by somebody else. You don't want to have pressure put on you by somebody else. You want to make your own ideas, do your own thing, and live or die by it. But what you don't need is somebody else's input, which can often be right for them and wrong for you. So, I mean, I do know, like I do know quite a lot of professional traders, but they also, the other problem with professional traders is they're very definite ideas. That they want to work in this way, and this is the only way that they work, and they really believe in the way that they work because it works for them. So, like I get given out to for adding to trades and things like that from other professional traders, but it works for me.
Yeah, I know. We've
I
had this
don't
conversation.
have a problem with what other guys do. They give me grief over it, especially the classically trained ones, like the because I think some guys like out of hedge funds, ex-hedge funds and stuff like that, where they're going, you shouldn't be adding to your trades. And I'm like, yeah, but it works though, doesn't it? And intraday in a nice intraday setting. And if the trend is going up, because again, it's the trend just buys you out of trouble. Because if you're at the bottom what you call it, of a range, and you're going to the top of the range, or at least the middle of the range, price might do it, but it doesn't necessarily mean it, it's still going in one direction. It just is how your trade, basically. So there we go with that.
There you go.
I
There you
think.
go. And with regards to that kind of like those folks on the kind of, let's say, the Bitcoin trade, I think a great deal of part of it is the volatility is wider and it's more compressed. And what I mean by that is that our parents, are kind of the generations and stuff before us. You had a few quid, you bought your shares in, I don't know, General Electric or IBM and stuff, and you just basically you sat on it and you rode it out. And when you got stiffed in like 87 or in .com in 2000 or in 2008, people complained about it, but generally the vast majority of people just literally, they would buy and hold, some blue chip stock. The thing is, Bitcoin, the swings within that, Bitcoin in terms of the moves and the volatility is just, it's almost like hundreds of times, okay, in terms of the pace at which things happen, the scale at which things happen. And so if you don't, A, know what you're doing, and B, if you don't know how to manage your investment, your trade, well, then it's going to come back to bite you on the arse. And, you and I have both met and seen lots and lots of wannabes, shall we say, who who've basically ended up it biting them on their arse, and then basically, they bought at 30,000 in 2017, just before it collapsed all the way back down to what, about 3, and then they bought at 60,000, when it, a couple of years ago when it got there, and they're only just now getting back up to, for it to being, either A, break even or profitable, etc. And the kind of the volatility of the swings over like over a day, over a week, but over even like a couple of years is a magnitude bigger than what, let's say, our forefathers would have dealt with. And you need to learn how to manage. You need to learn how to manage that, and you need to learn how to manage yourself in such environments. And the reality is, most people don't have experience of that. It's hit and hope, and survivorship bias means that we get to hear about the people who've done all right, and the people who've been screwed over or shafted. Especially if it's men, because of the ego, they don't want to talk about it anyway. They basically just gets packaged up, mentally, physically, emotionally, financially, and just put in a corner, and they never talk about it again. But and actually what we hear is, just because of the way the media works, they have that survivorship bias of hearing about people who hit it big and stuff in, not just Bitcoin, but also in like Mag 7 stocks and others. But the reality is it's not like that at all, is it?
No, not at all. I'm not surprised, because one of the big things I used to think with financial advisors in the old days is that your finances were their secret, to a certain extent, because you went and you bought your stocks, and then that was it. You forgot about it again, really, for certain at the time. And then I don't think there was volatile at the time. and they weren't as volatile for the simple reason that the cost of entry and exit was actually quite high.
Mhm.
So, I remember going down to doing a tour of the ones in Dublin like 15, 20 years ago, something like that. I had some money and wanted to invest some money. And, they were charging a percent in, percent out, and 0.5% management, something like that. I can't remember exactly what it was, but it was 2.5 or 3% that they were looking for. And that was just the cost of doing business, which seems bizarre now, considering you could go in and buy 100 shares for $1, a transaction cost. So you're just setting up your own thing. I also think as well that there isn't that has the ability for people to get in and out has made the markets more volatile. There's no way it
Yeah.
couldn't have made the markets more volatile. And I've seen that particularly with stocks over the last 10 years, particularly over the last 10 years, where they've gone from being tamer than they were to being a bit all over the place sometimes. Even the big ones like Apple, which are generally, not too bad technically. Because there were so many people involved in these big shares, like sorry, proper hedge funds and stuff, that it was in their interest, the liquidity, and it was in their interest to keep it running with some sort of semblance of the laws of technical analysis. I also think as well that people don't need and haven't needed a financial advisor for, again, a decade, um, since 2008, because once price went all that way down, by simply buying the S&P through whatever facility you want to buy it and holding on to it, you've more than beaten 80% of the people in the market anyway. So
Yeah.
why are you going out and paying, a big management fee for somebody to hold your hand? And that's what an awful lot of these places, when I went into them, and you sat in your big desk thing, your big conference table, and the nice girl brought you coffee and biscuits and a bottle of mineral water. And they talked to you about whatever and brought you in some brochures about investing in this and investing in that. And and I've got the impression at the time that they were not all the most honest of people that I've ever
Yeah.
met in my entire life. Some of the brokers that I have come across, and I certainly think that they had clients that they favored. Um, give an example, there's one person I know that was during the 2008 crash was asked for an extra 300,000 euros to invest in the market. And I feel that the reason that they were asked for this 300,000 euros was so that the broker could get some of his other clients out. So they would take, whatever stock they had in CRH or something, because it was an Irish crowd. They would take their CRH or something and dump it on this bag holder guy who they
Yeah.
just talked into giving them 300 extra thousand euros on top of the whatever he had given them already. So I think that that's a thing. And I don't, there might be some of the funds, Vanguard or something like that are okay, but that sort of mid-range fund size thing,
Yeah.
I wouldn't touch them with a barge pole. I really wouldn't, because I don't think that they have the skill. I don't think that they have the ability. They have no way of protecting your downside. So they go in and they buy something and they don't put in a stop loss. They just basically go, I think Apple Computers is great. Let's buy Apple Computers. That's it.
Yeah.
There's no,
Or zero.
yeah. And that's great if you happen to have timed it by accident to get in at the right time. And they're basically working on the fact that the market generally rises, and which is very true. But I think
Yeah.
that we've had a few upsets in recent times, and I think we're going to have more upsets as time goes on. We're going to have more of those big like 2007, 2008 events. Um, as new technologies come in, people lose their jobs, there's a change in whatever, there's going to be more events, and then you're going to see these big slides. Also with AI coming in, because one of the ways that they can create huge amounts of money is by creating this massive volatility. I mean, the amount of money that was made in those crashes is
Yep.
astronomical. There was
Yeah.
national debts made during um, during those things. Oh, the very last thing I'd say is that I remember being at a trader dinner someplace, and there was traders there from the 1970s, and they had to manually draw charts,
Yep.
which I thought was, how slow is that? Like, in comparison to now. So they literally had to get a piece of whatever paper and draw out their charts and draw in a trend line.
I don't necessarily think that's a bad thing for
No.
some traders. Actually, it slows them down and it forces them to embrace the market and stuff. So the late, I remember having a long chat with the late great David Paul about that and stuff. And he always talked about how his best trading came when he actually hand drew his own charts and stuff. So I wouldn't necessarily poo-poo that. Wouldn't necessarily poo-poo that idea in that sense. But yeah, no, listen, I definitely know what you mean in terms of let's say brokers and funds, some of the people not being the brightest in a toolbox, or they are there because they've got a bit of confidence and a lot of waffle, and actually, not actually a great deal of skill or talent. I don't know if you were there with me one night when I was a few years ago and stuff. I was in Kyo's. I know I was there with like Cartel, our friends Cartel and Pierce, and I thought you might have been there. And there was a guy there who had he was like I think he's the. I'm not going to mention the fund. It's kind of a big fund, but he's the chief analyst there. And Pierce was there. Pierce introduced me to him, and Pierce introduced me to him as like, oh well, here's Paul. He's a trader, used to work as a fund manager in London, etc. And as soon as he heard that, the guy just wouldn't have nothing to do with me. Did not want to talk to me. Would turn his back. Just would not engage with me in any way, shape, or form. And at first, I thought, have I done something to upset this fella? Or I'm just stood here outside. He's having a pint, and stuff. But it was Pierce. Fair play to Pierce. He kind of came out with it and said, "Well, actually, no." He said it's because you actually know what you're doing, and actually you'd be asking questions which would basically uncover how little he actually knows. He's got the job because he's played a good corporate game and he's got the waffle and he dresses well and he stands in front of rooms of people who don't really know anything, and so he's on a pedestal, whereas actually somebody who can see through the bullshit, basically, he didn't want to have anything to do. He just basically couldn't get as far away, couldn't wait to get as far away as possible and stuff to the other side of the pub and what have you, and you realise it's because we put quite a few of these lads and lasses on pedestals. Some of them are very good, but an awful lot of them are just corporate animals. They're just corporate animals and stuff and what have you. And as you said, it's they're coming out with a play, and it's just basing on basically optimism bias, namely that the a rising tide floats all boats, and if they buy a big tech company in a tech run, well then they'll probably be okay. And it's funny how I was actually tweeting about this very morning on my FX Trader Pull Twitter, because someone had started a thread about memories from the .com era, the .com crash, and that's where I'd started, and that's where I got my first view. And you can read the tweet and stuff. I was a very lucky punter, but I remember it vividly because the stocks were getting a bump, on the stock market from just putting .com on their name. So suddenly, Kodak went to Kodak.com, and that gave them like an 8% bump, for that day in the stock market. It was madness. It was wild. It was complete utter buffoonery of the highest order. And I've been saying this for about the last years that we are seeing a lot of it, another version of it, with tech companies coming out saying, "Oh yeah, we're involved in AI," and that giving their stock an absolute bump off it. But they've not come out with any real kind of plan or any kind of real product or service or evidence that they actually know what they're doing. But you ask the CEO and he says, "Oh yeah, we are balls deep in AI. We've bet the farm on it and stuff." And of course, the stock has just been, rallying away. And I wonder whether it's just another version, another generation's versions of the Emperor's New Clothes. And of course, there'll be some winners, but there'll also be some absolute shysters who have found out. There always are, aren't there? And stuff. But anyway, that's a different rant for a different day, isn't it?
Yeah, but I think there's what people don't realize is that there's this whole group of people who are called basically, I can't think what the sales traders that whose idea is to sell or to collecting cash for hedge funds, because the real money in hedge funds is not made in in the trading activities, it's made in getting the money in, and it's the safest money that they're going to make. So if you go out and you get a sales trader and he goes out and he can capture 100 million and bring it back to the fund, and you're doing a percent in, a percent out, and um, 0.5% management fee for that, and then maybe a performance fee or whatever, but we won't even talk about that. But that's 2.5 million. That guy's made for you straight away. You haven't done anything because
Yep.
all you're going to do is going to put it into the same 25 stocks that you'd already selected, which could be all the FANG stocks and a couple of fantasy AI companies or whatever it is, and a football team or whatever occurs to you. And that's where they're doing it, and that's where they're getting and that's where that whole image, that sort of Wolf of Wall Street and cocaine image comes from, is that those guys are out schmoozing and making friends with other people from the industry, trying to get their money off them, by loading them up with expensive wine and cocaine. And that isn't trading. Trading is a completely different thing. Because I remember meeting American guys that worked in hedge funds and were that type. And I was like, we're completely different. We work in the same industry. They're all talking about whatever they're talking about. But we
Yeah.
work in the same industry. But like, I'm a complete nerd compared to these fellas. Like, these are all out, real alpha men out doing their thing. And that's not me, because I have to get up the next morning and I have to concentrate on the stock charts, and I'm the one who might actually generate some money. And
Yeah.
it's a weird thing to think about it, because an awful lot of the time, oh yeah, the other thing I was going to say is a lot of traders and hedge funds are not necessarily, they're not the same as retail traders, in that they're there to carry out a function, which is to buy and sell stocks that they're instructed to buy and sell. And to talking to one of them, it was as simple as buying a stock every time it touched the VWAP.
Yeah.
That's what they were basically doing. That was the skill level, basically. So that they were going in, so
Nice.
they were going long in whatever, Apple or something like that. And then every time Apple came back and touched the VWAP, they bought another 1,000 shares, and until
Yeah.
they hit their position. And they did that a lot with currencies. I know he told me
Yeah.
like you'd have to get a billion in currencies, or yard, or whatever they call them in that particular thing.
Yeah.
And the only way that they would do that is they just wait for it to go up to the VWAP. And if they were selling it, they wait for it to go to the VWAP. And it's not like I have to do it, where I have to go down and actually analyze the chart and make a determination and future tell, to a certain extent, what I think is going to happen.
Yeah.
So,
Yeah.
yes.
There's an awful lot. 20 years ago, before, in the run up to the financial crash, there was an awful lot, of hedge funds who basically, were held up as being masters of the universe, but really they were just carry traders. So in those days, Japanese yen was about 0.5%. Interest rates. Kiwi dollar was 8.5%. And so basically, literally, these fund funds, like 4 or 5 lads in an office, they, as you say, they have sales guys who bring in, say maybe a couple of billion, and they effectively, sell the yen and buy the Kiwi, and then basically, sort of pocket the difference, and they're carrying 8%. 8% is, over a year might not necessarily be that exciting, but if you've got a couple of billion, 8% on a couple of billion for literally just sitting on it, and then because everybody else is doing it, then
Yeah.
you actually are getting real capital appreciation in the Kiwi yen, because every man and his dog was basically buying Kiwi, selling yen. So for a couple of years, these lads were making easy money, and everybody held them up as being absolute geniuses, but they weren't genius. They were just gaming the system and playing it the best. But once the crash happened and all those interest rates just got literally slashed, well, then suddenly those lads went out of business. Most of those funds went out of business because they didn't actually have the ability to adapt to the new environment. It was a new environment. Okay, so the carry trade was pretty much gone for years. All right, only in the last couple of years there's been snips of it coming back, but it's mostly, if you're trading the majors, it's mostly gone. So you actually had to, as I always say, you had to be an Ewok. You had to eat what you kill. All right. And that meant you had to know what you were doing. And a lot of those guys, they were very good. They made a great deal of money for 3-4 years in one environment. But once that environment changed, they were, they were out. They were out on the bones of their arse and stuff. And that's what happens. Hence, to bring it back, because I appreciate we should do it and stuff, is that having the ability to adapt to the market environment is a real skill. All right, that in itself is a real skill, and it's actually I've down as on one of my finishing points is just basically knowing when to go aggressive, knowing when to actually push the position and knowing when to run away bravely, like brave Sir Robin from Monty Python and stuff, and that is a constant learning curve for me, constantly having to basically refine when to go aggressive and when to run away bravely and stuff. And that doesn't help if you've had like 6 weeks of feeling a bit, you've been riding a flu bug and you've had 8 weeks, maybe 8-9 weeks where in FX, there's just not been really any massively exciting moves at all on a swing basis for FX and stuff. So you just have to realize, it is what it is. You have to work with what's in front of you and adapt to what's in front of you. That's what that's what they say. Good surgeons, good generals, good sports team captains. They're able to adapt to the landscape that they find themselves in and adapt accordingly. But that's a story for another day.
I always think as well that retail traders are often, I think, more skilled. If you get a good skilled retail trader, they're an awful lot more adaptable than a lot of the hedge fund guys. Because on top of everything else, they don't have that management income. They're not getting that extra 0.5% a year that they can sit there and they get their, whatever, it might be a small enough wage, but it covers their overheads. So and it couldn't be, I mean, where would you get that number, that size of skill, to get a bunch, because a lot of guys are quite young in trading, I find on the hedge fund side of it. So they're not going to have built up the experience, they're not going to build up the skill that you would really need to run those types of because I don't think an awful lot of traders are really in their prime until they're in their 50s, because they've only really getting to that point in their career where they have been through the mill, they've done everything, they're a little bit jaded and they're a little bit whatever, but they have the skill, and I don't see what the and I don't see it. I just think
I wouldn't disagree with that. I think there's also an element of emotional intelligence as well. I think by the time a guy is at his 40s, he has probably had as much failure as success in his life, and that can temper your emotions in a good way and sometimes in a bad way. Whereas actually when you're a young thruster and stuff, that can work for and against you. Right, especially trading, and I've seen it lots and lots and lots. Young lads blowing up because they're just no understanding of either themselves or understanding of risk. And if you don't understand yourself and you don't understand risk, your trading journey is going to be a pretty challenging one, I would suggest. But I think that's actually probably a very good convo. We'll do that in a future one, in difference in ages and also difference between, let's say, an institutional trader and a retail trader. I think that actually would be a useful session to do in the future. I think people would benefit from that. Anyway, let's draw that to a close there. Okay, as always, plenty for us.
One last point I want to make is that a lot of young guys are not trading for money. In the end of the day, what they're doing is they're trading for status. They're trading for an imagined lifestyle. They're trading for a lot of different things. But the last thing they're actually trading for is money as such. So they're going to engage in tactics and setups and stuff like that they imagine is going to give them the status and the quick advancement up the ladder, and that's what gets them in the end.
If you look at the absolute sort of kind of ubiquity now of prop firms offering challenges, and within that kind of let's call it like kind of that social media ecosystem around it, there's an awful lot of emphasis put on young lads to try and pass their challenges within like 1 or 2 days. You're not man until you passed your funding challenge within the first 24 hours and stuff. And that's nonsense. It's utter nonsense and stuff. It has absolutely nothing to help it. But they're doing it because they want that quick advancement of status, quick advancement into money and stuff. And as by chasing the wrong things, they end up getting nowhere near the right things, getting nowhere near the outcomes they want and stuff.
I also think the prop houses themselves want that return. Like they want that speedy thing. It's those that are driving it to a certain extent. And again, it's the same type it's the type of person who sets them up, and it's the type of person. And the thing is, as well, is that the prop firms are the different things. So you get in three good traders, like three really good traders, and you get them into your prop firm, and you can have 10 mediocre guys sitting around soaking up the air. Those three guys, if they're really good, are going to make 90% of your profits. And so if you're searching for them all the time, you're searching for them all the time. So the harder you make it and the more cream of the crop that you get, the better off you are as a prop firm, because the prop firms are interested in getting the best talent that can do it in the quickest possible time, not the average guy off the street, basically, And then they're looking for a certain kind of young fella that they can exploit, I think, to a certain extent. They're looking for that kind of because they have to get that really hard working, because they're only going to get them for a certain length of time, because at some stage, if you're like a really good trader, you're going to wake up one morning and go, I'm doing this from my house for me. And they're only going to keep you for a certain length of time. They're not going to keep you forever. They can't indent you to the table or something like that. So they're only going to so they're looking for a particular type of trader.
Yeah, present paying you, Well, it's true. The HR and the manager. You first look at, look how much we're playing Doogie this week. No, I'm not happy with that, and they would sooner get rid of it just because of human insecurities and ego. But anyway, let's not get, as I said, but those are different conversations for a different day, aren't there? There's plenty we can talk about that. So listen, let's draw this to a close now. So as always, listen, just to say to people, thank you for those who've been listening, those who've been following us, liking us, subscribing, dropping us questions and stuff. Really appreciate it. As we always say, if there's something you'd like to see us talk about, we'd happily take that on board and stuff. We want the sessions to be useful, and we'll be back next Wednesday, where we're into a new quarter. So a new quarter is about what are you doing to basically make Q2 the best best quarter of your year, and what can you do and stuff. And so we can talk, there's plenty we can talk about that in terms of how you focus for that kind of next 3 month bundle. So yeah, thanks very much for joining us, Ian. Hopefully get rid of that flu once and for all. It's just more opportunities for you to make hot toddies, isn't it, really, basically, and stuff.
I could imagine myself having one maybe tomorrow night, because the markets are closed on Friday. So
yeah, there you go.
I think I'm going to watch the new Roadhouse film just because Conor McGregor's in it. So
yeah, right, yeah.
I can fast forward through it. It's just interesting, because I think he's probably just acting like this, like a typical guy from that area anyway. Yeah. So I don't know. I haven't going to have a nice Friday off anyway. That's what I certainly definitely want to do.
Well, exactly. Maybe, yeah. Do a little bit of research. I hope everybody has a good long weekend. All right. I appreciate we've got quite a global audience and stuff wherever you are. If you're having a long weekend, what have you, hope you have a great one. And we'll speak to you next week, won't we?
Indeed.
That is us. Nice one. Thanks very much. Cheers.
Bye-bye.